things real estate, money matters.
Stop scrolling for a second because there is something happening in the housing market right now that most people are not paying attention to. Foreclosures are climbing again, not everywhere, not on every type of loan. But the newest numbers are telling a very specific story. Atom just released fresh foreclosure data, and foreclosure filings are up 26% compared to last year. 26%. That is not a small move. The actual bank takebacks, the repossessions, jumped 45% from a year ago. So this is not just paperwork being filed. Homes are actually being taken back. Properties are actually changing hands. And when that starts happening, buyers, sellers, homeowners, and investors all need to pay attention. Now, let me be clear. This is not hitting everybody the same way. Conventional loans are actually holding up pretty well. Those borrowers are behind at under 3%. That is near a record low. So if you have a regular conventional loan and you are making your payments, breathe. But FHA loans, that is where the pressure is showing up. The latest numbers show FHA borrowers falling behind at 11.5%. That is the highest level we have seen since 2012, outside of the pandemic. And here's what makes that so important. FHA loans now make up more than half of all seriously past due mortgages in this country. Half. From one loan type. So when people ask, is the housing market in trouble? The real answer is not the whole market, but certain borrowers are definitely under pressure. And FHA borrowers are one of the biggest groups feeling it. Now, why is this happening? FHA loans are the loans a lot of first-time buyers use. Lower down payment, more flexible credit, more access to homeownership, and that is a good thing. But it also means many of those homeowners have less cushion when life gets expensive. And let's be honest, life has gotten expensive. Insurance is higher, taxes are higher, food is higher, utilities are higher. And a lot of the pandemic relief that was quietly helping keep some of these loans together has now wound down. So the safety net got smaller at the exact same time household budgets got tighter. That is why these numbers matter. And here is where this really hits home for my people. Georgia is one of the top states for foreclosure activity right now, and Atlanta is one of the top metros in the entire country for new foreclosure starts. Detroit, my Michigan folks, you are on the watch list too, so let me talk directly to three groups of people. First, homeowners. If you are starting to fall behind, hear me clearly. Do not wait. Do not go silent. Do not ignore the letters, and do not assume it will just fix itself. The earlier you move, the more options you may have. Loan modification, repayment plan, forbearance review, selling before it becomes a foreclosure. But those options start shrinking the longer you wait. Early is everything. Second, buyers. If you have been getting outbid, discouraged, or priced out, pay attention. More distressed inventory usually means more opportunity down the road, not necessarily today, not necessarily next week, but this is how buying windows quietly start to open. The people who are watching the market now will be better positioned when the opportunity shows up. And third, investors. This is your signal. When repossessions jump 45%, inventory is coming. That does not mean jump blindly. It means get positioned. Know your markets. Watch the foreclosure filings. Line up your financing. Understand your numbers. Look at DSCR loans. Look at non-QM options. Look at HELOC strategies on property you already own. Because the investors who prepare...
This concludes our session for today. If you're interested in investing, please check out our website for all your real estate needs. Thanks for watching. All things real estate, money matters. All things real estate, money matters.